In today's fast-paced business environment, rapid growth brings both opportunities and hidden risk. As companies scale at unprecedented speeds, how can they protect themselves against the mounting liability challenges that come with expansion? Welcome to the Policybazaar for Business show partnered by ET Now. I'm Kavita Thaplial, and today we are going to explore the delicate balance between innovation and protection, uncovering strategies that help businesses grow confidently while safeguarding their future. Joining me in this conversation, we have Namita Arora, Vice President and National Head Liability, Credit and Specialty Lines, Reliance General Insurance, Jaipal Singhal, Group CFO, ID, Fresh Food, Sajja Praveen Chowdary, Director and Head, Policybazaar for Business. Welcome to the show. All right, so Namita, Sajja and Jaipal, welcome to this discussion. And today we are going to be talking about liability insurance, Sajja. Let's just get the concept clear. We are talking about liability risk covers for corporates and for businesses, right? What all does it entail?
See, basically, liability, as you understand the word, right? It's about anything and everything that can come under which is probably a financial loss or a kind of, a suit that might arise on you.
Okay.
Now, financial loss that might happen with respect to, say, there's a client of yours or there's a, corporate which is working with, say, under supplier, or say is kind of providing some services to other client, and any kind of financial loss that client or say a third party, again, we're speaking about corporates and hence I'm taking an example of say a client kind of thing, where the client faces due to any kind of deficiency in services that you might have provided, or any kind of deficiency in the kind of products that you might have provided as a part of the supply chain to them, or the other example might be any kind of third party who's not related to your entity kind of suing you for any kind of losses that they would have faced because of your product, services, or something which is related to it kind of thing. Anything and everything, who takes care of this loss or who picks up the cost of this loss, right? That's what liability policies are about. Okay. So there are different kinds of liability policies which define in terms of what kind of loss is covered under what kind of category.
So there is a structure to it.
Yeah, there's a broad structure to it.
For example,
let's assume DNO, which covers directors and officers. Now, any kind of executive decisions that directors and officers are supposed to take kind of uphold within a corporate, and in case of any kind of loss that might happen to shareholders or the other parties because of that. Now, this policy covers that.
Okay.
Now, versus say errors and omissions policy, which is also called a professional indemnity policy. These are predominantly those which, for example, there are certain professional judgment that you kind of do right when you are in day-to-day job. Like for example, if you're an architect, there are certain things that you do as part of your profession kind of tomorrow, a deficiency in that or a small misjudgment here and there would have led to something and someone might have sued you. Now, every company or every corporate might not require everything.
Exactly.
Depending on the stage where they are and depending on the kind of product or processes that they run. So for example, for a tech company which is kind of working, say with a US based companies they say that they need to have a E&O policy, which is a professional indemnity policy for sure as part of their process, or in order to win that tender or in order to win that contract kind of. Now, DNO, they might not ask you for, but as a company which is kind of into business and it's your duty also to protect your directors and officers, and hence you might want to have it. So that's where the difference comes from. And depending on your need these products, you can look at which product suits your needs the best. But then having said that, again, any and every category of liability policies basically take care of any kind of financial loss or a suit that might come on to you because of say deficiency in services or anything that you might have done unknowingly or your employees would have done unknowingly, or some fault in your processes or your product, and it's a wide scope that's there under this.
How aware are we about this kind of a coverage that insurers offer?
So Kavita, the way we see it, because we are in constant touch with the insurers and the landscape also is changing. One needs to, as much as we are aware today, tomorrow the landscape changes, regulations change, geographies change. So what we do, at least in my experience, whatever we have done, we have constantly stayed in touch with the insurers, the partners, the service providers. This has helped us, therefore be aware. But if I look at industry in large, I think there is a bit more awareness which needs to be built in. We have seen examples where, because the prime importance for them becomes day-to-day business. What I'm going to do tomorrow, this quarter, particularly for listed entities. Instead of quarter century, we start focusing on quarters. So that is where some of these very important parts, but maybe not impacting my tomorrow's business, therefore gets to some extent overlooked. When we look at large groups, I think the awareness is quite large. But as we go smaller within the groups, when we, let's say, MSMEs, particularly, I see they are not aware. Even within the new age sectors, I see that the awareness could be probably a little low. Where the whole industry is helping us is constantly being in touch with us, sometimes doing seminars,
that's needed.
education sessions. Those are very helpful.
So how are you trying to structure these kind of products? Because as you also highlighted that the awareness level is not exactly where it's supposed to be, and also it's something that's seen widely in the West. Big companies already are aware because they are in line with the Western concept and trend over there. But then we're talking about New India, we're talking about Viksit Bharat, where we have a lot of MSMEs, SMEs. So first, how do you structure these kind of products sector-wise, and how do you also help them understand the kind of risk that they might have?
So firstly, I think this is quite a customized product. But having said that it's a customized product, we don't say that we don't have solutions for SMEs or individuals.
Okay.
So I'll start with individuals. I'm going to go the opposite way, not from large corporates, but from individuals. With Policybazaar itself, we do a lot of work in Reliance for doctors' professional indemnity, where we give, we cover them, for their negligence in their normal day-to-day, work.
Professionals,
and, obviously that's a complete noble cause that they're doing, and they need to get protected. So similarly for, small and medium enterprises, you can have certain pre-underwritten products which are even there on websites of companies, but it's just that it's more awareness which will lead to these companies coming on the website and start buying these products. And we can do a small package or a small directors and officers for the directors, or a GL policy, which is a public liability, basically a slip and trip or anything which can happen from your premise liability. And see, the risk is changing.
Exactly.
And risks are emanating from contractual and regulatory requirements of these corporates. Beside the main concept of risk, for example, I'll speak about the Public Liability Act, which was a statute. Recently, there's been a legislation that the amount has increased from 5 crores or 15 crores to 500 crores. Because, the government also feels that as a statute, it needs higher protection. Or if we speak about the Consumer Protection Act, which came, 2019, which says that every person who's selling the product, not just who's manufacturing it, but companies like Amazon, they're also responsible, for example, the products that they sell. And there are vendor programs for e-commerce giants like that. There are certain programs which we've also done for new age tech companies, understanding the model that they operate in, because these companies do not function like a large corporate, but they function a little differently. Could be aggregators. Okay. Yeah. And then for something as recent as CrowdStrike, which we all saw. So there is a cloud outage cover, which is a higher version of the cyber insurance, which says that if there's no cyber attack, but if there's a human error and your data in the cloud gets affected, or there is a interruption in your business because of the cloud, because today most companies have the data on cloud.
Exactly.
How does it affect you?
Yeah.
So you can have complex solutions stitched by reinsurers, and you can even give fancy covers like cloud outage to large corporates.
Okay.
So well, like I said, it's a combination of three: your own requirement, the regulatory landscape that you operate in, and also the contractual requirements.
Okay.
So I think we have to adapt to the increasing risk, the regulations, what is happening in and around us, and ensure that our policies keep upgrading according to the new requirements.
Yeah. So that is something I would want to focus on. I will come back to you because I want to understand how do you keep up with the change in when it comes to sector trends and even individuals. But before that, if someone is watching the show right now, okay, has a business, what would be the steps that you would want to recommend them to get this kind of an insurance?
See, basically, I think before getting this insurance or trying to get into this, insurance kind of thing, I think the first thing that you'd want to understand is, where does this business stand today currently? What kind of risks are there with respect to your business?
So understanding your risk has to be the first step.
The first thing is understanding your risk is very important in terms of, are there risks which emanate from, say, your contracts? Because that's a basic thing, right? Today, something which you would have signed, but you would have overlooked at some point of time, saying that you've been obligated to kind of give some kind of guarantees or assurances that tomorrow, in case of a particular loss happening or a particular incident happening or a particular product being recalled, which is part of the supply chain, then you have to bear such loss. Now, is that covered or not? Which is purely contractual in nature. The second thing is from a from perspective of, say, are your directors and officers covered enough or not for any kind of issues that might come up tomorrow, where your shareholders might sue you or some other external parties might sue you from a corporate governance perspective. And then you look at, say, a regulatory side of it. the regulatory side of it, which might say, again, as just Namita said, kind of the regulatory landscape is also changing, right? With respect to Data Protection Act or other things, new things keep coming up every now and then, and depending on which side of sector are you in, whether it's, say if you're in the financial side of it or RBI kind of thing, there are new regulations that keep coming up. Now, with respect to that, are there any new kind of risks that emanate from the processes that you have, or anything that you would want to cover yourself?
Okay.
Yeah. So then basis that, then you look at which products might, kind of suit you. But for that, again, people like Policybazaar for Business are there to help kind of teams, right?
Okay.
Where we can kind of come in and kind of suggest you basis your understanding of risk. And then what we also do is, once you have your understanding of risk, we also work with a wide range of clientele. So we are able to kind of do a benchmarking kind of to say, okay, this size of a, say, BFSI segment kind of a client would ideally look at this kind of a coverage. And these are the products that we do with them, which might be a combination of 2-3 products kind of, right? And then what kind of coverages do they take, whether it's basis the turnovers or basis, whichever numbers that are there within that product, and then suggest them what is the right thing for them. And then it's up to the client, right, now to take whether they would want to take a particular size of a cover or not. So where we recommend today to people that, for those who don't have a claim and who might see that in near future that you might have a lot of increase in revenue from those operations or increase in exposure that might come up, to kind of start building up that coverage from today itself, rather than saying today you have, say, a 50 crore cover and all of a sudden you're going to come about a couple of years down the line and say, I need a 500 crore cover. Now, it might not be possible for insurance companies also to give that on that day. Having said that, it might also happen that some incident in between, it might not happen with your company per se, but something would have happened in your industry in a similar nature. And hence it might impact even your coverage also getting upgraded. Because you might be saying nothing happened with my bank or my my company or my processes, so why should I not get this cover? But it doesn't work that way, right? Insurance at the end of the day is about pooling, and then insurers also pool back with reinsurers.
Right.
Now reinsurers would also face some risks and some kind of claims from somewhere, and then they see that sector altogether in similar direction kind of a thing. So that's where these kind of risks emanate from. So that's where we come up from someone who would want to either look at taking a coverage afresh, or someone who has a coverage. What we do is today we kind of try to benchmark it with respect to others in the similar category kind of. And then second, we also do a kind of gap analysis.
So I really want to go deep in the quantifying aspect of this risk. But then before that, how did you come up with your risk analysis, and what were the pain areas for you that you identified?
So the way I think of it, Kavita, is like, risk, there are of two types. One is defined, right? We already know this is a risk, and people like Policybazaar, all of them help us covering those risks. But there are one part of the risk which we don't see, right? I feel that risk is something we don't see. And that risk, when it triggers, it generally we have seen that it happens only after it has triggered. Sometimes we have not even taken insurance.
Exactly, yeah.
I'll give you an example of COVID, maybe not in a insurance example, but that risk nobody saw, and therefore nothing was covered. And all of a sudden the world was sort of thrown at tandem, saying that okay, today COVID has happened, nobody was prepared. That is because you did not see. Once you see the risk, I think you are covered. Even within the risks that you have seen, people at times, or corporates, or like we spoke about, right? Smaller corporates think about the probability, the possibility.
Yeah.
Right? Possibility is there, yes, but is the probability less than 0.01%? So then you start structuring, you think that this.
Okay.
I think Sajja spoke about cyber, etc. I think many of the corporates think that okay, hamara nahi hoga. I mean, this is not going to happen for us, and not cover. When they cover, then they start looking at the quantum. Okay, should I take it for 1 crore, 2 crore, 5 crore, 25
exactly,
crore,
yeah.
Crores,
you don't know how much is enough.
Yeah. Last but not the least, you have taken a cover, and every year you end up just renewing that cover.
Yeah,
but
and then you say that I'm not using it.
Yes. Have you re-evaluated, saying that my business has doubled from last year to this year? Have I added enough cover there?
Okay, yeah.
Another thing which we see from an industry perspective, businesses are also dynamic. Like, I think Namita and Sajja both spoke about the regulation, the change. But businesses are also dynamic. Yesterday I was doing one product. Today I could be doing another product altogether. Yesterday we were present in 2 geographies. Today we could be in 5 more geographies altogether. Yeah. Yesterday we had one set of customers. Tomorrow we may have completely a different set of
Products
customers.
need to be flexible that way.
Yes.
Yeah.
Yes. And the learning therefore has to be also continuous, saying that what has changed from last year to this year.
Okay.
It should not become an annual exercise of renewing the existing policy.
Yeah, yeah.
So quantum is critical. Risk is what we don't see is critical. To not go by probabilities, I think, is very critical. Once you start, bringing in probabilities, that is where the whole sway happens, and At the end of it, another thing which I very strongly believe in
Sure.
is a good solution sometimes may sound expensive, but a bad one can cost a fortune. So those are the things I think from a corporate side we look at, and whoever is a deciding authority within the corporate should look at, because his fiduciary duty is to protect the corporate from all sorts of possibilities,
Exactly.
all sort of probabilities, all sorts of risks, and that is how I would like to see risk as.
Sure. So we have help over here to identify the risk aspect in your business, but how do you help them quantify that risk? There is specific benchmarking that you also mentioned.
That's a
you
very
refer to.
interesting question that you asked. And obviously, we have actuarials and, data, obviously data is definitely a part of it.
Sure.
But there are also different ways. One is quantifying your own risk. When I was explaining this concept, I mentioned that, this is one risk where unlike, let's say, a property insurance or let's say a normal asset insurance, you cannot quantify the exact amount because it could be uncertain also, depending on the kind of lawsuit which can come onto you,
For example.
depending on the propensity of the cyber attack or the, extent of the lawsuit which can come onto you. For example, tomorrow if a company which is making tobacco gets a US, class action suit, because they are manufacturing tobacco and there is suddenly, there's a cyber attack which comes on maybe India's largest, I think on Netflix I was just watching a movie about a cyber attack on a company which is into power and, which can even lead to a business interruption of, let's say, days, weeks or years. So it is difficult to quantify the exact amount, and that's why this insurance is a little different from, asset insurance. But, you definitely have parameters.
Okay.
Parameters, it could be, basically what companies of other size, of your size, take in different geographies or jurisdictions and what you do, where we call a peer benchmarking, which does. Secondly, it's definitely on the operations of your business.
Okay.
And what we see in similar businesses, the kind of risk that the businesses pose on you. But we also need to understand your business from you. For example, we ask a client as to what do you think if there's a cyber attack? How many days would your systems be down? Or, what's the kind of revenue you feel you can lose?
Yeah.
Or example, if I'm doing a CGL, I look at the product liability with a pharma company. Definitely operating in the US, it could be a class action suit also, because they're operating in that, territory. Third, it could also be the geographies that you're present. Whether it's if you're a multinational operating in, let's say, multiple countries, then obviously you are subject to all the geographies or all the jurisdictions, and we spoke of regulations and the regulations that you are a part of. Okay, and obviously the fourth is the changing nature of the business.
Yeah.
We all read the Hindenburg saga, which was first time in India, but abroad it's a concept. It's a concept which is there. Companies are, obviously subject to, these activists, and regulators also encourage, because sometimes that helps them in controlling frauds and also, controlling the loopholes also. So the changing environment that you're a part of. And what I always suggest to our clients is, or as an institution, that you have to start somewhere. So start with the cover and keep on increasing it every year. And when you are increasing it, if you're growing at, let's say, 20% or 10%, you can increase it. But let's say if you are growing inorganically, not just in terms of revenue, but in your presence. When you read a balance sheet of a client and you say that, okay, you are growing in geographies, you are growing in businesses which are more specialist, or in basically you're also growing in terms of, your approach, the brand, you're being acquired by an international brand. Obviously, you need to increase the cover. So it's a combination of various factors, which I just labeled. And obviously, it's not one straight formula. So it's difficult for clients. But obviously, as insurers and as brokers, you cannot set a limit for the client. That's for the client to choose, always.
Okay.
But you can always give them a guide as to these are the parameters and this is the peer benchmarking. And so then the clients can take their own decision.
Sure. Any kind of liability that is not covered.
Today, in terms of, how do you put it? There'll be certain things which, for example, anything that might happen due to, let's say, the company itself might be involved, knowingly being involved in a particular thing, right?
For example,
these kind of things come into litigations or between even the insurance company or anyone also. Let me put it this way. Today, let's assume under liability policy which we spoke about today, right? If it's a errors and omissions kind of a policy that we spoke about, professional indemnity or errors and omissions, something that might have happened due to an error kind of a thing, or a misjudgment, or of your professional who's, let's assume if you're a law firm, you're suggesting something to a firm and there's a judgment error that happened or a miss that has happened by mistake kind of thing. Or similarly, the architect example that we took about, or let's assume as part of your profession you were doing something but you didn't expect that to happen and you suggested something and it turned out adverse. Those would be covered. But then you willingly kind of doing some kind of act within that. For example, that's other thing which you speak about, rather than speaking about something liability which is not covered, I think we should more about speak about situations which we see today where certain coverages don't get triggered on something happening. For example, within these policies, for example, there are PR costs. Now, what is the kind of PR cost that you've seen, for example, right? Now, in a PR cost, let's assume some kind of a directors and office policy got triggered, a claim got triggered, but the limit of PR cost that you put in is very small. But for example, tomorrow, you being into, for example, you're a consultancy business, you're a consulting business, and primarily your PR is, or your brand image is what makes your business in a consulting business, right? Yeah. Unlike an FMCG product where your product is being used day in, day out. So in such a case, if your PR costs are so low, which I put up in that policy is a limit kind of thing, then what you're going to end up spending out of your pocket is going to be so huge and not getting out of the policy as such, right? So these are certain things which I would say, rather than saying not covered, what are the coverages that you're taking with respect to the risks that you have is what we have seen, at least in some of the cases. I remember very recent, I think 2-3 months back, as one of the things where we again had a similar kind of a nature, I would say, kind of where probably a DNO kind of a policy which is there with one of the client, and they wanted to kind of claim the PR costs against that. But in that case, what happened is the claim itself did not get triggered. There was some incident that happened, and as a result, they had to kind of spend a lot on PR kind of a thing. But in that case, in directors and offices, the first thing is there has to be a suit against the directors and offices, and then things have to trigger out of it, right? So similar to any other insurance, like once that incident gets triggered, then the rest of the things also will follow. But then without the incident itself getting triggered, then things would not happen of that sort. So these are the kind of things that you have to take care of when you're looking at this specifically, of whether it's something that gets covered, or like the way you asked, what is the thing that doesn't get covered kind of.
I think for that we will need one more show on this particular topic, because I'm done with my timing. Thank you so much for being on the show today, and that's a wrap. Thank you so much for watching. Goodbye.